Good evening, thanks for joining us. This is NTD Business, and I'm Paul Graney. We have details on President Biden's first budget proposal today. How much is it worth and what's in it? New York's new budget is raising concerns in the business community. We hear from Business Group and a prominent business owner. And corporate taxes could hurt businesses or consumers if prices go up. But what happens to your stock portfolio if corporate earnings take a hit? That and much more coming up on NTD Business. President Biden has released his first budget proposal to Congress. It includes billions for spending on Democrat priorities like education, healthcare, housing, environmental protection. The budget's a sharp departure from his predecessor, Donald Trump. Trump tried to slash agency funding, but Biden's $1.5 trillion proposal is 8% higher than the current year. Under the proposal, defense spending would remain flat, while non-defense spending would increase 16%, give more money to poor public schools, public transportation, and environmental cleanups. It'll also expand funding for background checks on gun sales, while slashing the funding for the border wall. It's not a Trump budget. This is just the first step of the budgeting process. Congress will still need to pass spending bills before October 1st. On Wall Street today, stocks again closing at record highs with a late-day rally. The Dow rising 297 points, about 8.9%, S&P 500 gaining 32 points, 0.77%, the Nasdaq adding 71 points, about half a percent. Tech stocks again among the better performers, Amazon shares rising as warehouse workers in Alabama rejected an attempt to form a union. More on that in just a moment. Yields resumed the rise Friday. 10-year Treasury rose a little bit up to 1.66%. Oil prices lower, gold also falling. Investors now turn their attention to quarterly results next week. Major banks kicking off the season. Goldman Sachs, JP Morgan, Wells Fargo all scheduled to report on Wednesday. Worrying news for consumers. A price index of wholesale goods and services jumped way more than expected in March. The Labour Department's producer price index measures inflation before it reaches consumers. It rose by 1% in March alone. Gasoline costs up 8.8%. That puts the inflation at over 4% for the last 12 months and could continue to heat up as the economy continues to reopen. Federal Reserve predicts inflation will only run as high as 2.4% this year and then fall back to around 2% next year. But others believe that's way too conservative, and money printing by the government will push it much, much higher. Some of that money printing came as support in the form of stimulus checks. The government also put eviction bans in place, mortgage forbearance programs in place to help people. But did nobody tell the taxman that people were supposed to get a break last year? Property taxes in the U.S. spiked in 2020. Homeowners across the country got hit with higher bills as property taxes on single-family homes jumped 5.4%. Property data firm says it's the largest average increase in 4 years. Good timing. Altogether, taxes levied on single-family homes last year were $323 billion. New York's new budget raises taxes on the rich. It also gives thousands of dollars to illegal immigrants who lost their jobs because of the pandemic. Assembly Speaker Carl Heastie says the budget addresses historic inequalities. NTD's Colin Fredrickson reports.
New York's new $212 billion budget gives the state the highest combined tax rate in the country. Those making over $1 million a year will be hit hard.
What concerns me the most as a New Yorker who represents thousands of small businesses is that New York State's spending $212 billion. That is a significant increase in our budget, and they're going to do this not just with an infusion of federal funds. They've raised taxes significantly on a number of New Yorkers.
He says on the business side of things, the tax increases mostly affect large corporations. He says the National Federation of Independent Businesses worked hard to make sure the increase in the corporate franchise tax didn't capture small businesses. And they've restored a small personal income tax decrease.
And that will benefit somewhere around 65% of small businesses in New York State. They pay their taxes through their personal income taxes, so that reduction will give them some benefit.
As many businesses leave New York, the budget further incentivizes those remaining to follow.
The short-sightedness of New York State and New York City is really will drive us out. Our business is a brick and mortar type of business where we have physical stores in New York City. As leases come up, we're questioning every single one.
Last month, a group of business leaders, including those of J.P. Morgan Chase, Citigroup, and BlackRock, issued a public letter. They warned that the rich will move if New York increases taxes.
I'm in contact with many other business leaders in New York, and I can tell you that just about every single one of the people I've spoken with in the past week has told me that they are now seriously contemplating moving to Florida.
Also in the budget is $2.1 billion for undocumented workers. Undocumented workers who lost their jobs can get a one-time payment of up to $15,600. Colin Fredrickson, NTD News.
President Biden, of course, is planning to raise the federal corporate tax rate too. We've covered the potential impact on the economy at large. But what about specifically for your 401k or stock portfolio? One of the ways to value a stock is its P/E ratio, the stock price compared to the company's earnings per share. That ratio is already at historically high levels, meaning stocks are expensive right now, very expensive. New taxes are like an expense for companies, bringing their earnings down, and that would make their stock even more expensive. So, could it trigger a sell-off that would hurt your portfolio? I asked Lance Roberts, Chief Strategist at Real Investment Advice.
Look, you're going to have that problem anyway. If you raise corporate taxes, you're absolutely right. When we report earnings and companies, every quarter we go through the whole earnings announcement, game. And I call it millennial soccer, right? Because we lower the bar so much for earnings estimates that every company gets over the bar, and we have an 80% beat rate. It's great. But the reality is yes, if you raise taxes, that is going to come out before earnings. So when we talk about earnings will decline by about probably 7 to 9% if you're going to raise taxes by 7, 8, or 9%. That's going to impact earnings at the bottom line. With valuations already at historically high levels, if you reduce the denominator of that equation, the earnings part, that's going to make valuations even more expensive, and that's a problem for investors longer term.
And are we looking at the marketplace, and or we always are, but particularly at the moment, everything is relative. So it was one of what producers said, maybe people are overlooking the threat of these corporate taxes on share prices. And then I said, well, where else are they going to put their money? Right? You can't buy bonds, property prices are so high. So is it it's the next best alternative anyway?
Well, it is for now, and unfortunately it is until it isn't. The problem is at this point, we've got a lot of liquidity coming into the market because of all these different stimulus programs, et cetera. That's elevated stock prices. We have a very, very high valuation metric in the market. Markets are extremely extended from long-term means. Technically, there's a lot of problems with the markets, a little in the intermediate term. So yes, there's currently no other place to put stocks, or currently there's no other place to put money other than in stocks at the moment. But the problem is what everybody is expecting is this economic boom. But higher taxes, higher prices through inflation, higher interest rates will undermine that underlying economic growth story, because those are actually brakes on economic growth. So if we do get higher interest rates, we do get higher inflation, PPI out today, 1% growth there. When you start seeing those inflationary pressures hit, combine that with higher taxes, those are all brakes on economic growth. And at some point, the market's going to wake up and go, hey, wait a second, earnings aren't growing as fast as I was told they were going to. The economy's not growing as fast as I told it was going. I'm going to have to now reprice assets, and then that's where investors get hurt.
What do you think? We spoke a little bit before. You predicted maybe a Japanese-style slowdown rather than a big economic crash. If I don't want to put words in your mouth, but are you still predicting with all these things you just listed, higher taxes, etc.? You think we're going to see a gradual slowdown in the economy?
Well, what you're going to see, so we're not going to see a gradual slowdown. We're going to continue that slow pace of growth over time. What we're going to get from all this stimulus is, and I just have an article out on our website today at realinvestmentadvice.com talking specifically about this, is that in the short term, we're going to see a nice little pickup in economic growth. All this liquidity hitting the markets, $1,400 checks, people are going to go out and spend it. but once they spend it, it's gone. And unless you're going to keep doing more and more stimulus to individuals, eventually their incomes are going to fall back to what they're earning. Wages aren't rising. And now prices have all lifted up because of the inflation, because of expectations of stimulus. So now people that were spending money before are now even technically poorer than they were, which is going to drag economic growth. So yes, in the next year or so, we're going to be right back into that 1.75 to 2% growth rate in the economy. And people will be scratching their head going, hey, what happened, right? We're now 30 trillion in debt and we're still not getting any economic growth. So, this is a problem. When you're spending $5 of debt for every dollar's worth of GDP, that's just not sustainable long term.
Wow, incredible. Lance Roberts, Real Investment Advice. Thank you.
Thanks, my pleasure.
Florida is the cruise capital of America. It has 3 of the world's busiest ports, and it looks like they're ready to go on vacation again. So, the state is suing the Biden administration to reopen the cruise industry. NTD's Christina Kim has the story.
Florida's Governor Ron DeSantis said Thursday, quote, "To be clear, no federal law authorizes the CDC to indefinitely impose a nationwide shutdown of an entire industry." He said this regulation is based on very little evidence and data. The lawsuit is asking the court to stop the CDC and Health and Human Services from imposing the conditional sale order. The CDC said they'd eventually reopen the cruise industry, but they'll keep the order in place for now. The CEO of Norwegian Cruise Line points out that the CDC treats similar industries differently.
The CDC has shut us down for over a year now. I don't know of any other industry that has suffered at the hands of any federal agency like we have.
If the court doesn't undo the conditional sale order, the lawsuit says around 160,000 Floridians whose livelihoods depend on the cruise industry could lose everything. During just the first 6 months of the pandemic, Florida's cruise industry reportedly lost $3.2 billion in economic activity. And to date, over 6,000 former cruise employees filed for state unemployment. Del Rio says it's unfair that the cruise industry has to follow such strict requirements when others don't.
Everybody on board is vaccinated. Everybody on board has to follow these science-based, very strict protocols. So the need for all this nonsense, daily reporting, do hotels report daily? Do airlines report daily? No one does.
Governor DeSantis notes that cruising has resumed in other countries, meaning some Americans will be on cruise ships regardless, just not out of Florida. According to the Associated Press, industry leaders say there haven't been any new outbreaks tied to their ships. DeSantis says this lawsuit is to protect Floridians from government overreach. He says he believes they have a good chance at winning the case. Christina Kim, NTD News.
Amazon workers at a warehouse in Alabama had a chance to form a union, but they said no. Today was the second day of a public ballot counting. More than 1,600 eligible voters opposed unionization, but union officials say hundreds of challenged ballots must still be addressed after the public count. Amazon waged an online and offline campaign to combat the union drive, when in Alabama would have encouraged warehouse workers across the nation to unionize. Jeff Bezos, whew. We told you a few days ago hackers could have your Facebook data, but you might never know. Facebook says it doesn't plan on telling you if you're one of the over 530 million users whose personal data was leaked. The company told Reuters it's because the data is already publicly available. There's nothing users can do to fix the problem. Business Insider first reported the leak. It included phone numbers, Facebook IDs, names, locations, emails, even your birthday. Facebook has grappled with data security issues for years. In 2019, a Ukrainian security researcher found a database with the names, phone numbers, and unique user IDs of more than 250,000 Facebook users on the internet. We don't know if this data dump is related to that database. If leaky data is a repeating problem for Facebook, issues with the 737 MAX is a major repeating problem for Boeing. Now, it's telling some airlines to ground the planes, finding a new issue with them. Apparently, it's an electrical problem. Fred Katamai reports.
Just 5 months after Boeing's troubled 737 MAX jets finally returned to service, more turbulence. U.S. Airlines temporarily grounded more than 60 of those jets Friday. The moves come one day after Boeing told the Federal Aviation Administration that it recommends temporarily removing some planes from service so it can address a manufacturing issue that could affect its backup power control unit. In response, Southwest Airlines removed 30 MAX planes from its schedule, American took out 17, and United pulled 16 MAX planes. The airlines have no estimate as to when the jets could return to the skies. A Boeing spokeswoman said the issue is not related to the key safety system tied to the two fatal crashes that led to the 20-month-long grounding of the MAX planes.
Impossible Foods is preparing for a public listing that could value the plant-based burger maker at more than $10 billion. Gloria Tsao reports.
Plant-based meat maker Impossible Foods is preparing to go public, which could value the company at over $10 billion, according to sources familiar with the matter. The listing would highlight a growing demand for plant-based meat products, worth substantially more than the company's $4 billion valuation in a private funding round last year. Sources say Impossible is exploring going public in the next year through an IPO. Alternatively, it could also be looking at a merger with what's known as a special purpose acquisition company. That's a shell company which aims to acquire a private company by raising funds in an IPO. It would mean less regulatory scrutiny for companies wishing to go public, and more certainty that valuation will be attained and funds raised. A spokeswoman for Impossible declined to comment. Founded in 2011, Impossible Foods sells its meat-free burgers and sausages in grocery stores and also partners with the likes of Burger King and Disney. The company's backers include celebrities like tennis star Serena Williams and rapper Jay-Z, and says its reach has grown from 150 stores to over 20,000 in the past year alone. Shares of rival Beyond Meat are trading more than 400% above its IPO price from 2019. Overall, plant-based retail sales in the U.S. hit $7 billion in 2020, up by 27%, according to an industry analytics report.
The New York Stock Exchange says it'll delist a Chinese property company for failing to report financial results. The online real estate company is called Donka. It used to be called Phoenix Tree Holdings. Its business model is similar to WeWork but deals with residential properties. NYSE says it requested information from the company in February and March this year, but Donka just never provided it. So the exchange halted trading for its U.S.-listed stocks. Donka, in fact, hasn't reported any financial results since the first quarter of 2020, and that quarter it suffered a net loss of over $170 million. In the 3 years before that, it also reported losses totaling around $1 billion. Donka started trading on the New York Exchange in 2020, but its stock lost 75% of its value in the last 12 months. Bad year. While the world economy collapsed during the pandemic, China took the opportunity to go on a shopping spree across Europe, buying up companies across the continent. But the Italian Prime Minister Mario Draghi just revealed that his government blocked a Chinese takeover of an Italian semiconductor manufacturer. And he says he'll block more if he needs to. It was an easy call for him to block that takeover after seeing how the global chip shortage has hurt the auto industry. Italy's Golden Powers rule allows its leaders to protect strategic businesses. One top official now wants Italian steel and automotive sectors to get the same protections. The European Union as a whole has in fact beefed up protections for companies left vulnerable to takeover by China during the pandemic. Still to come this evening. The second-hand clothing business is booming. One luxury reseller wants to buy your old items. And imperial jewelry pieces once owned by Napoleon's adopted daughter go up for auction. It comes 200 years after the French ruler's death. That and more after a short break.
When the game's over and it's time to go home, sometimes your car has other plans. That's why I drive with CarShield. As expensive as car repairs can be, I wanted the best defense around. And with CarShield's administrators, they make sure that you don't get stuck with expensive car repairs like this. Did I forget to mention that with CarShield's network, I also get 24/7 roadside assistance, towing, and rental car reimbursement included. That's peace of mind every driver needs.
I saved close to $9,000.
If it wasn't for CarShield, I wouldn't have my car.
I gotta tell you, it's quite a relief not to worry about expensive car breakdowns anymore. And with CarShield's administrators, you can choose your favorite mechanic or dealer to do the work. Plus, it's easier than ever to get America's favorite car protection. There's no long-term contracts, and coverage is affordable for every wallet size.
If I didn't have CarShield, I would have been out of pocket $7,000. And as a parent of 3, I couldn't have that.
I trust CarShield administrators because they paid my claim.
Talk about MVP protection for less than the cost of a ball game. Take it from me, the Boomer. Nobody wants to go through the headache of an expensive car breakdown on their own.
If you're driving without a warranty, you have to call CarShield.
Yeah, you do.
So do yourself and your car a favor. Call CarShield. They're your best line of defense against expensive breakdowns.
CarShield administrators paid almost $4,000 for my repairs.
CarShield is wonderful. They saved me $1,300.
With CarShield, I saved $4,100 on my first repair.
Over 1 million happy drivers couldn't be wrong. Call CarShield now.
Protect yourself now against expensive auto repair bills. Call CarShield for a free and instant protection plan quote. Once your car breaks down, it's too late. Call 800-781-2990, 800-781-2990, 800-781-2990.
Burrito chain Chipotle wants its staff to get a debt-free education. The company is set to offer free degrees to employees across a range of different fields. Includes agriculture, culinary arts, hospitality. The company's debt-free degree program includes almost 100 degree options at 10 universities. The initiative is being done in partnership with Guild Education, and employees can take part in the program after just 120 days of employment. That old designer purse sitting in the back of your closet is actually in high demand right now. Luxury retailer The Real Real wants to buy it from you. It says business is booming, recently opening 5 stores with plans for 4 more by the end of the year. The Real Real has stores in cities like New York, San Francisco, Los Angeles, Chicago, and it says if you're interested in selling your luxury items, you can just walk into one of the stores and walk out with less clutter and more cash. And a jewelry collection once owned by Napoleon's daughter, wonder will they sell it, will go on sale at auction in Switzerland. The auction house calls itself a once-in-a-lifetime sale. Indeed, Arlene Richards reports.
Christie's Geneva will be holding an auction on May 12th. They are selling 9 imperial jewelry pieces once owned by Napoleon Bonaparte's adopted daughter. The pieces include a tiara, earrings, pendants, and a bracelet. They will be offered as individual lots. The jewels were shown to the media in Amsterdam earlier this week. The auction takes place at a moment of historical significance.
2021 marks the year of 200 years of Napoleon's death, and I imagine that the family decided this was a good point in history to part from these jewels who have been in the family for so many generations.
The jewels originally belonged to Stephanie de Beauharnais, the Grand Duchess of Baden. Napoleon married Stephanie's aunt in 1796. He later adopted Stephanie after her mother died.
Well, I think in jewelry history, Napoleon is probably one of the most important provenances you can find. So it's a very rare occasion that important pieces of that kind come to auction in the first place. And then to have that amazing provenance on top of it it only happens once in a lifetime.
Christie's is counting a total of 38 natural sapphires in the Beauharnais Paruri. They all came from what is now Sri Lanka with no further treatment. The collection also features an unknown number of diamonds.
It's very tough to say the exact number of diamonds, but we're basically in the thousands of diamonds, and each diamond would have been cut perfectly for this piece and for this design. So you find very different sizes, cuts, and styles.
The auction house will not disclose the name of the seller, but the pieces are coming from descendants of the royal family. One highlight of the collection is the crown of Portuguese Queen Maria II. It's set with a remarkable Burmese sapphire in the center.
That's the latest business updates for this week. You can still catch NTD Evening News with Steve Lance at 6:30 p.m. Eastern. But for NTD Business, that's all for this week. Thank you for watching. Have a great weekend. We'll see you Monday.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.